Good morning, everybody. It's Christian from Serene Education with the 4 major analysis update for the 18th of September 2012. Hi, guys. I had to think about that one first. It's still early. So the 18th of September, it's a Tuesday, and let's have a look at the euro against US dollar. So clearly on the weekly, you can see a nice bullish engulfing wick last week, really moving higher. You'll notice that we have two parts of our 4-part strategy template, i.e. we have blue arrow, blue candle. However, the CTC histogram on the other side remains negative. That's because we're still below the institution. However, you can see on the daily a lot of momentum to the upside recently. A 45-degree angle, then going straight into a nice 70-degree angle towards the last week. A lot of momentum to the upside last week. However, you can see that after the Friday close, we had indecision yesterday. Spinning top, and indecision is... Well, a spinning top is an indecision candle, and therefore we should be looking for or biding our time for a decisive result after to happen after a spinning top. This indecision has come, if you take the all-time high that we had back last year, if I'm not mistaken, back in May, the May high of 2011 to the July low that we had recently, and you can see my Fib retracements now. The 23.6 has been broken above that 1270-500 mark I mentioned not so long ago. Nice bullish engulfing, taking us lower, pull back, and then a massive continuation candle, support candle above that, which took us above the institution, moving average and heading higher. And now we've gone into what we had before was a 1300, a psychological round or support, a prior major support and resistance level for this pair. If I just put it down here, there you go. You can see through February, March, April, May of this year, a lot of support for this pair through this period before we saw the breakout and that massive shorting opportunity through May. Since then, we've had a nice consolidation bounce, and then we've seen price moving to the upside, and doing so, breaking below above the institution moving average, which is the first time it's done so since September of last year. So this is quite a positive sentiment drive. However, coming unstuck at the Fib extension retracement area now at the 38.2. So you can see here from the high of May last year down to the low this year in July, you can see 38.2 now. You can see a lot of consolidation at this area through parts of September, October last year, through December, January, February of this year. A lot of consolidation through March, April, May of this year as well. So consolidating at this area. So long-term traders would potentially be taking profits here, and sure enough, you can see that on Monday. So apologies, on Friday we had this massive drive into this area here at 1500. However, price pulling back, people closing their positions at the psychological level. And yesterday, indecision candle. Okay, so indecision, the outcome, we have to wait for decisiveness. So what's going to happen? Where's that decisiveness going to come from? Well, one of the two things could happen. We could actually have a pullback back towards the psychological support and resistance level. Yes, we could see price pulling back towards the 1300. Why 1300? Because that's the breakout area. So if we're having consolidation here, we could see price pulling back towards this area. So if you want to see that, let's have a look at our intraday time frames. Notice 1500, that's 38.2 retracement area on our daily, but look at the candles going into it. Nice shooting star here, exhaustion candle at this major resistance level, which happens to be the Fib retracement level now. And then we've had indecision candles, very small tight ranges, not a hell of a lot of price action whatsoever, and then another exhaustion candle here. So you have two exhaustion candles at a major resistance level. This is clearly telling us this is exhaustion now at this level. We should start seeing a pullback to occur. So one or two things could happen. We need to now look at where the price is likely to pull back to. So one or two things could happen. We have to look and see where price actually made that move from. So there we go. If you take this consolidation range where we saw the breakout to the upside, take the low of that to the high that we've seen recently, you can see the 23.6 Fib retracement area now sits at 1300. And 1300 is a major price support and resistance level that we've had through the best part of the start of this year. So 23.6 could potentially now see a bearish engulfing candle here on this time frame to really see price reverting to the downside. However, if it remains topside favored and it ranges, if I go to my hourly now, see if I can actually show you this guys. If you notice that price, this will move to the upside here, this consolidation before we saw the breakout. This was on Friday. So if you take this little range over here, for example, from here to the upside, you'll notice that 23.6 is the support. It's the governing support now for this pair. Notice our RSI, yes, we've had divergence on this as prices have been heading back into this 13,500. You can see RSI has definitely dropped through this period here. However, as long as price still remains on the upside, and you can see the 23 short-term hourly 23.60 fib retracement from this initial move to the upside that we saw on Friday. This is still acting as support here. Then we could see price reattempting the highs here, because RSI, yes, even though it is diverging, it's still very much above the 50. Okay, and as long as it remains above 50, it's still positive. Okay, all we've seen now is price going into a price support and resistance fib area here at 13,500. It became well overbought, so we should have seen a correction, and sure enough, we've seen a divergence occurring, which confirms that. However, as long as price is still trading above 50, it's still positive trend, and you can see the institution moving average is still below price, so everything is still looking good. And our CTC histogram is still telling us we should be looking for positiveness. However, what we can see now, because of this major support and resistance level here, we could see price pulling back or consolidating now. How far this consolidation will take, where will it take us, that remains to be seen. But you can see now, if I just do a fib retracement from there, you can see the 23.6 is the current support. So break below that, we would head towards 38.2, break below that, head towards the 50, break below that 61, etc. Our first target, our major support and resistance level, would be here 1300, which coincides nicely with the 50% retracement area. So get a bearish engulfing candle break here, we should be targeting the 1300 for starters. On to sterling. Let's have a look at the sterling weekly. Major bullish candle last week, heading into this price support and resistance level here in the shape of the previous high that we noticed just recently. There we go. Let me just extend that. Here we go through April and May. That high here, roughly the 1300 or 16300, apologies. So on our daily, we should see that clearly above us. There we go. So I've got that area above me as my prior support and resistance level high. Oops. And that's where we're off to now. So you can see the prior high that we saw before we saw the massive sell-off through May. That's going to be our next target. And you can see as we head into this, you can see price action now starting to slow down. We've seen a lot of movement to the upside. However, it's still been capped. Each time the US session close happens to draw back. So yes, it's moving higher, but it's drawing back as we head into this psychological price support and resistance level at 16,300. So looking at our 4-hour intraday time frame now, you should see a lot of consolidation occurring. You can see a lot of very indecisive candles. Not a hell of a lot of movement as we saw last week in particular. Nice bullish candles moving to the upside here, very indecisive, spinning tops, a lot of wicks as we head into the psychological major support and resistance level above us. The CTC is still telling us, the histograms are still telling us it's still positive. However, we now got a red arrow on the last 4-hour candle. So setting a heads up, we should see consolidation as we head into this major resistance level above us. Fantastic. So what do we do now? Well, we're consolidating. Ideally, if we want to see any further movement to the upside, that 16,300 needs to be broken or breached as soon as possible. Otherwise, we can see a consolidative range occurring for the foreseeable future. You look at the hourly chart, you can see the 16,300 above price, so you need to make sure on all your time frames that you'll be trading. These areas of major support and resistance are plotted, so there we go. So I know there's a major resistance level above me. Notice as price has been heading higher than the prior one, we're getting divergence now on this pair. See that? Price making higher highs. However, the RSI has dropped significantly from an overbought situation. We went into going into the 70, which is a major overbought situation on RSI, and now we're seeing price moving lower. So it's telling us that we should see confirmation of a pullback occurring. So you could notice here through just above the 162100, for example, a little slight resistance there. However, you can see price consolidating quite nicely above this range. Ideally, we'd like to see price trending back below that. Get below that, then we should see price pointing back to at least, you can see these prior consolidative range areas here. So there's another one here consolidating at roughly 1610. Another one there roughly around the 1600 major psychological support and resistance level. So if we get a bearish engulfing candle taking us below 1620 for argument's sake, then we should be targeting the 1610, which will take us back towards the institution. Break below that, then we should be looking at 1600. Break below that, then we should be looking at 5900, etc. to the downside. But as long as price is still trading above 50 on the RSI, it's still positive pullback. Okay, it's still positive consolidation. It's only when it drops below the 50 and we drop and break below the institution, then we're going to start seeing more negative stance on the intraday time frame. So just be aware of that. On to US dollar Swiss franc. Let's have a look at this pair on the weekly. Nice bearish engulfing candle last week, moving below this February tracement area. You can see I take the August low of last year to the high here at the 1000. I want to see how much it's likely to pull back. You can see I've got 23.6, the 38, the 50, the 61, and then the 78.6 would be down here somewhere. You can see prices now closed below that figure now on our weekly, and you can see there's resistance now at 930. So going forward on our daily, I need to make note of that area. You can quite clearly see the Friday close after finding break of that institution moving average on Tuesday, Wednesday, Thursday, a nice exhaustion candle, and Friday the sell-off below that 930 now, which is what we wanted to see. Fantastic. Now it's got to consolidate. You see an indecision candle yesterday on daily, on the Monday. Now we want to see the indecision. We want to see a decisive candle, and the decisive candle needs to be further selling away from the underside of this prior the resistance area here at 930. And if that's the case, then we should be targeting long term. We should be targeting the 8900 now, which is our weekly Fib extension further to the downside. This will be a 38.2 Fib retracement area at 8900. So on our smaller time frames, what we want to see, like for example on our 4 hour, you want to see all that indecision now. You can see a lot of spinning tops, dojis in particular. At the underside, we want to see a nice bearish engulfing candle now at the underside of this. Notice our CTC histogram is negative across the board. We're making lower swings. Our moving averages are all above price, acting as resistance. All we need now is a definite confirmation signal, i.e. a bearish engulfing candle at the underside of 930 now to confirm that we should be looking for further shorting opportunities intraday. So hourly chart, notice all the moving averages. The two smaller time frame ones, the 20 and 50 now are consolidating. You can see we have a consolidative range at the underside of 930. RSI has picked up. That's great because it's just confirming that we now resistance is ideally the RSI has got to be trading above 50 to tell us it's positive, but you can still remaining below. You can see these lower swings, and the RSI is pretty much following this trend direction. Notice the 50 period moving average as we speak now. The last 2 hours has acted as a ceiling level. In the past is actually quite nasty. It's regulated price to the downside by this little breakout over here. You can see the 50 period moving average acting as a nice ceiling level. Most important, our institutions above price, and our histogram on either side on our hourly is still looking negative. And the most important thing is we are now trading below a major support and resistance level in the shape of the 930. So now we want to see a break of this consolidative range at the underside. So break lower, a nice bearish engulfing candle, and as long as RSI still remains below 50, it's still negative sentiment to the downside, and hence we should start seeing price in the next couple of hours or so giving us a true signal, and we should be looking to capitalize towards that 8900 long term. Last pair of the day is US dollar Japanese yen. Let's have a look at this pair on the weekly. You can see a nice hammer here. It's a typical hammer type formation on a price support and resistance level here in the shape of the 78 mark. Why 78? You can quite clearly see through June, July, August, September, a lot of support through this pair. And if we go even further back towards last year, you can see through August, September, October, November, December, January, a lot of resistance. So now price on a weekly finding support here. It's still trading below all its moving averages, which is still negative, and you can see the lower swings are still depicting negativity, and the histogram is pretty much showing you that. Institution still way above price. However, the longer we go sideways and the more support we find at 78, the more likely we're going to start seeing buying sentiment coming through. And the start of this week, the new week, we can see the sentiment starting to move through the upside. So if we look at the daily range now, you can see we were trading lower through the bits of last week. However, that bullish candle to the upside on Friday, moving price back up against 78, and because of that, price following through yesterday on the Monday. However, you can see now our trend line is still capped, and we still have the institution moving average on our daily still above price, which is negative. We need to get above that as soon as possible. However, the longer we remain above 78, the more likelihood is we're going to see price attempting the highs back up towards the 80 mark, which happens to be our next prior major support and resistance level. So you can see today on the Asian session trading lower to start with, however moving to the upside as we go into the European Open, bullish in candles. So we should start seeing price moving higher to the upside through the smaller intraday time frames. So look for any opportunities to the upside. We could see price coming unstuck roughly around the 79.20, but as long as it remains above 78, we should be looking for further highs to remain in favor. That's it, guys. That's it for today. Hope you have a fantastic trading day. Please make sure you look at the news, see if there's anything out there that's going to change market sentiment or factor in with market price action today. It's important that you guys are aware of it. Other than that, back it up with sound money management and keep your trading very, very simple, guys. Otherwise, I'll see you first thing tomorrow morning. Until then, trade serenely.